So, ladies and gentlemen, the last session of our conference is dialogue between Dr. Somkiat Tangkitvanich, President of Thailand Development Research Institute or TDRI, and Dr. Supavud Saicheua from Phatra Securities. It's about the future of Thai economy. Dr. Somkiat is publicly recognized as the leading Thai expert in the area of international trade, investment policies, as well as media and telecommunication policies. Moreover, his expertise extends to economic analysis of law and research and development policies. And now, please join me in welcoming Dr. Somkiat and Dr. Supavud on the stage, please.
Hello everyone, last session, but we'll try to make it really interesting for you. Let me begin by thanking Dr. Somkiat very much. Honored to have you here. Dr. Somkiat is a distinguished economist, well-respected economist, and I've always looked forward to hearing your views. So please go ahead, Dr. Somkiat.
Thank you so much. When Dr. Supavud gave me a call and invite me to be here, I accepted almost immediately, even after some negotiations, because TDI and Phatra always cooperate and compete with each other at the same time. We cooperate in many areas, but we compete in two areas. The first area is we try to compete with Phatra in recruiting good economists. Certainly we fail. We cannot compete with Phatra because Phatra pay a lot higher than we do. The second area that we compete with Phatra is we try to compete to be the most pessimistic analyst in Thailand. And certainly, again, we lost because Phatra is much more pessimistic than I am, especially Dr. Supavud. And imagine that you have two pessimists together on the same panel. The Thai stock market, the index has risen yesterday and keep it until today. But with the two pessimists together, what happened tomorrow? Only God knows. Okay, so I would like to begin my talk by presenting you my view on the medium-term outlook of the Thai economy. And when we would like to talk about the medium-term outlook, I think we need to consider one important trend, which is the demographic trend. And if you look at the trend, Thailand, as you know, will be our fastest aging society, economy in East Asia. After Japan and South Korea, both of which are already developed countries. So Thailand would be the very first country still developing, but becoming an aged society. So we become an aged society before China for a few years, and then become an aged society before Vietnam for more than a decade. And for Malaysia, it would be more than 2 decades. And for Vietnam, for Philippines, it would be more than 3 decades. So you can see this contrasting demographic trend. And it will be really important to understand the Thai economy. With the fast aging population, so Thailand have a few problems. The most visible one is the low forecasted growth. If you look at the Bank of Thailand calculation of the potential GDP growth, it is forecasted that for the next 10 years, potential GDP growth of Thailand would be around 3.1% in the business as usual scenario. But even though you include all the government investment in infrastructure, the potential GDP for Thailand during the next 10 years will be something around 3.5%. That's the Thai government number. If you look at the OECD number, which I show here, you can see that the average growth of Thailand during the next 5 years will be roughly the same, in the area of 3% or at most 4%. But if you look at the Philippines and Indonesia, it will be around 5 to 6%. If you look at Myanmar, Laos, Cambodia, it will be around 6 to 8%. So Thailand has the lowest forecasted growth among ASEAN countries. And to achieve higher growth, I think Thailand needs to do a couple of things. I would like to mention three things. The first thing is that we have to move up. By move up, I mean we have to stop doing low value-added activities and transform Thailand into a country that produce higher value-added activities. For example, doing research development, design, branding, marketing. Those are activities that can earn you more income, more profit, and we have to move out at the same time. Move out, I mean, you have to undertake outward investment. This is because if you would like to move up, you have to invest a lot in fixed cost investment, like research development, like marketing, like branding, which means that if you have not enough the production scale, your cost will be very high. If you would like to invent something new, you have to have large base. So you have to expand the market, which means that you have to either export or invest overseas to entertain, to enjoy larger economy of scale. And at the same time, as I shown in the previous slide, actually this slide, you can see that ASEAN is growing faster than Thailand. So if you would like to seek market opportunities, again, you have to move out. So the second thing that Thai companies need to do is to move out. And if you need to move up and you need to move out, it is inevitable that you have to move together. By moving together, I mean the Thai public and the private sector have to move together. In order to move up the value chain, in order to move out, the government have to negotiate certain favorable conditions with neighboring countries. And apart from that, the public and private sector have to move together in reforming structural problems, for example, education, training labor forces, and also improve the ease of doing business in the country. As I mentioned before, I used to be quite pessimistic for a long time. But now I am a little bit cautiously optimistic, at least comparing with Dr. Supavud. I see some sign that the country is moving up, at least a little bit. For example, if you look at the left-hand side chart, you can see that the level of private investment and public investment altogether in Thailand used to be very low. Before the turn of the decade, the average amount of R&D investment to the Thai GDP is around 0.25, which is very low comparing with the East Asian standards. Korea it is 4%. Thailand is only 0.25%, which is far too low for Thailand to move up. But then if you look at the last couple of years, you can see that the investment in R&D in Thailand has gradually risen. I said I was a little bit cautiously optimistic because I have to be cautious because I don't really believe the number. But still, it is a good sign, that the number has risen gradually. And if you look at the composition of the R&D, you can see that the blue part, which is the private investment, has become a larger share of the R&D investment, which is very good because public spending in research and development usually does not go to commercialization. But if it is the private company itself that do research, then you can be more certain that it will bring some fruit. On the right chart, you can see that the Thai government has formulated at long last the very first policy to bring Thailand moving up the value chain under the umbrella of Thailand 4.0, which you have heard a lot recently. But before this current government announced this policy, it has stumbled trying, experimenting with a number of policies, which was not really successful at all. If you remember, at the beginning of this Prayut government, the government would like to promote 10 special economic zones in the provincial border area close to our neighbor countries, and it has not been very successful. So the government have shifted to another policy promoting so-called clusters and super clusters by promoting the so-called S-curves. There are 5 existing S-curves that the government would like to expand and 5 more new S-curves. And this one also is not so successful. And then the government announced the Thailand 4.0. Thailand 4.0 is a nice idea, but it's just an idea. So the government have to implement it somehow. So the government finally came up with the idea, which I believe is quite good, the Eastern Economic Corridor, which will combine the idea of special economic zone with the idea of Thailand 4.0 to implement the 10 S-curves idea. So I think for the first time, after stumbling for many times, the Thai government have realized that it have come up with a good idea and the right idea that you have heard about yesterday. So what can we expect from the EEC, the Eastern Economic Corridor? The Thai government have been very generous in providing tax incentives. I think if you look at the tax incentives the Thai government provides in the EEC, it is one of the most generous in the region. I travel a lot in ASEAN, and I found no countries that the government is willing to provide 15 years exemption of CIT and in certain cases PIT in Thailand for the first time. So you might consider this Thailand GAN sales. Would Thailand GAN sales be successful? This is our independent analysis conducted by the TDI team. We have an inside team called TDI EIS that try to analyze government announced policy. And we have come up with the answer whether the EEC would be able to attract significant FDI. And our answer is always yes and no. The yes part is that there would be certain sector that will be able to attract FDI. Among it is the affluent and welfare tourism, because the government will expand the Utapao airport, and this is very important. The Don Mueang airport and the Suvarnabhumi airport, our two main airports at the moment, are already crowded. The Suvarnabhumi phase 2 will be extended very soon, but it will be fully occupied very soon as well. So they are already bottlenecks. So we need a new airport. And luckily the government, this military government, has been able to negotiate successfully with the Navy. Utapao belongs to the Navy. And it took them a long time to come together to decide that Utapao will not be only the Navy base, but also be a new airport. This is a big achievement. And I think by that alone, we will be able to attract more tourism and investment in that area. Secondly, the government would like to target next generation automotive. They talk quite a lot about hybrid car. They talk quite a lot about EV, electric vehicles. They talk about battery. They talk about new fancy things. But if you talk to the private sector, especially Japanese assemblers already locating in Thailand, what they would like to do is not EV, but the hybrid car. And big players like Toyota have already announced that they're going to invest a lot in hybrid car in the EEC. So that would be another big achievement in terms of attracting investment. But for other sectors like smart electronics, agriculture and biotech, and also food for the future, I think it will be a very, very future. It will not come very soon. Only firms with existing production facilities are likely to expand investment in Thailand, not new ones, not fancy projects, not high-tech electronics, not high-tech biotech. We don't have the foundation for that. But at least I think the government have done some right thing to target certain industry that will be able to attract FDI. Apart from the 5 existing S-curves, the government is also promoting new 5 S-curves, beginning with industrial robotics, biofuels and biochemicals, integrated healthcare, digital businesses, aviation and logistics. And again, in these 5 new areas, we think that not every sector will be successful. We identify a few sectors that may be successful. I would like to begin with aviation and logistics. The Thai government would like Thailand to be the best of aviation maintenance, repair, and operation, MRO. Basically, Thailand is an aviation hub of the region, one of the hubs in the region. So there are a lot of flights flying in and out of Thailand. So it's really natural for Thailand to be a repair maintenance hub as well. I think that one would not be too difficult. And with the new Utapao airport, this project will be have a high chance to be successful. The next one, industrial robotics. I don't buy I don't buy the dream of the Thai government that Thailand can be the hub of industrial robotics production. When I look at the statistics, how many robotics we have been importing during the past few years, it is usually around 2.5 thousand robotics arms per year. And altogether, during the past 10 years, we have around 25,000 robotics in Thailand. The scale that requires profitable investment in robotics is around maybe 3 million units. So I don't think we can make it in this area. Neither can we make it in biofuels and biochemicals area unless the government have to subsidize because the project has yet to be cost competitive. So I think the government has made the right choice to select the EEC to be the new hub of investment. And I think the EEC will be partially successful, even though it will not be as successful as the former Eastern Seaboard project 2.5 decades ago. That's all about move up. Now, about the move out. There's a puzzle in Thailand that even though the government is trying to promote private investment by providing tax incentives and they are doing so many things, there are not many private investment at the moment. And the reason I believe is that the opportunity in Thailand is not that high comparing with the past and comparing with our neighboring countries. So what you see is that Thai companies, when they have enough cash, they have enough profit, what they do is not they're going to invest in Thailand, but they move to invest overseas. From the left-hand side chart, you can see that a few years ago, Thai companies already invest overseas more than multinational companies invest in Thailand. It was for the very first time in the Thai history. If you look back, for example, some 15 years ago, the amount of our investment was very marginal, but it has become very significant, around 8 billion baht, $8 billion per year, comparing with the inward investment of around $7 billion per year. So there is a regime change in the Thai investment. And if you like to understand where Thai companies invest, you have to look at the right-hand side chart. So basically, listed company in the Thai stock market invest in ASEAN, in particular, and in CLMV, in ASEAN in general, and CLMV in particular. Apart from that, they invest in North Asia, Europe. But as you can see, it is our neighboring countries that the Thai companies invest the most. Now, look at what happened when they invest in the neighboring countries and in ASEAN. I have to warn you that this is a really quick exercise that our team has done in comparing the rate of return of investing in ASEAN with investing elsewhere and with not investing in ASEAN at all. This is not a systematic exercise because we have not carefully compared Apple with Apple yet. But we just lump together companies that investing in ASEAN, investing in CLMV, and investing in Singapore, and not investing anywhere. Very quick comparison. And you can see that there is a selection bias to compare this because companies that invest in ASEAN, either in ASEAN 3 countries, which is basically Indonesia, Malaysia, the Philippines, and CLMV, they have larger size. So larger size invest more than smaller companies. So it's not a very good comparison. But if you look at the net profit margin and you look at the rate of return on asset, you can see that companies invest in CLMV is the one who has the highest net profit margin of around 11%, comparing with companies that not investing anywhere in ASEAN at all. The profit margin would be around 6%. This is quite natural because neighboring country has been growing much faster than Thailand. And certainly, if you go very fast, you have a lot of business opportunities. So I think the Thai companies have already seen these opportunities. That's why they move overseas to invest in ASEAN countries, especially in CLMV. That's the benefit of moving out now. The final point, moving together. Public and private sector have to move together to move Thailand forward, to move Thailand up the value chain, to move Thai companies out in ASEAN and other countries. The Thai government has realized at long last that it cannot do its business as usual because the World Bank has ranked Thailand 46 among 100 countries, around 100 countries, in terms of the ease of doing business last year. It's not so bad, but if you look back around not even 10 years ago, Thailand is in the rank of the low teen, something like 13, 14. Our rank has dropped very quickly during the past 10 years, and I think the Thai government has been alarmed by the drop of our ease of doing business ranking. So what they are doing now is they try doing together with the private sector to reform the Thai regulatory regime. They have undertaken an exercise called regulatory guillotine, meaning they would like to get rid of needless and harmful laws and regulations. It took a long time for the private sector to convince the Thai government. According to an insider I heard of, I talked to, they told me that it took 2 years for the Thai government to realize that this is something that Thailand have to do. But at last, the Thai government have committed to the project. And the study team that is trying to propose what kinds of laws and regulations are going to be abolished is working faster than expected. That's the good news. Something that I would be still very cautiously optimistic. And you have to know that the adverb very is on cautiously, not on optimistically. I am very cautiously optimistic that the Thai government and the Thai private sector can work together to undertake this project, and that will bring Thailand to a new status. Thank you.
Well, Dr. Somkiat, thank you very much. And whatever you say, I think you have an impressive economic team, especially if you don't pay them a lot. I have to ask you behind the scenes how you do it.
So I would like to request for the audience, if you really believe that our work is good, please subscribe to the TDI EIS service so that we can compete with Phatra more equally.
I'd be happy for that to happen. Actually, I will be retiring soon, so we will build up a team, maybe bigger, younger one, to compete with Dr. Somkiat. Let me begin my portion of my view on the Thai economy, and I must say that I do agree with Dr. Somkiat's assessment. It's a very, I think, insightful and insightful analysis of Thailand's opportunities and challenges. Now, I would like to move the picture a little bit into the shorter term. We as brokers tend to think in terms of the immediate future a little bit more. And this is what worries me. The conventional wisdom is that we are having a recovery because exports are doing well, because tourism is doing great, and because it's a matter of time before government spending comes through to get the economy on a sustainable growth path. You recall that the government agencies are planning for GDP to grow 5% a year on average over the next 20 years. That is the only way in which we could achieve the government's objective of Thailand becoming a developed country within 20 years. According to Kun Parameti yesterday, Thailand's GDP per capita right now is $6,500. In 20 years' time, it needs to go up to 15,000 to make that grade. Now, how can we do it? I am actually optimistic that Thailand will muddle through and survive and do well in the context of being a country that's located in the middle of CLMV. Our neighbors are growing, they have a young, dynamic labor force, and we will benefit, and they will benefit from interactions in the region. Now, coming back to the present though, my skepticism is this. Number one, if you look at the left-hand side diagram, we have had no inflation in the last 3.5 years. This is the CPI index. It's a CPI index. It says no inflation at all because the index is practically unchanged since about the beginning of 2014. For inflation to be zero for that long creates a new psychology. I'll come back to that later. The diagram on the right, I think, is even more telling. We are saying that we are in the midst of an economic recovery. In fact, we're saying it's gaining strength. Then, why, number one, is the money multiplier actually starting to topple down? Money multiplier is the ability of the system to expand, right? M2, to expand credit. In this case, we're actually using the broader money, including everything. So there's a reluctance to expand money supply. In the middle of a recovery, number two, more importantly, NPLs are rising. This is an inverted axis on the right-hand side. NPLs are rising, and they're rising perceptibly. And we've been talking about NPLs peaking for the past couple of years, and they haven't peaked yet, and they keep on rising. You usually don't have NPLs rising in the middle of a recovery. Now, there's a lot of talk about inflation, headline inflation being transitory. It's because oil price. It's because lately because of vegetable prices pulling the headline inflation down. But the key point is always the argument that inflation has been falling temporarily, even though it has been zero for 3 years. 3 years is a long temporary, I thought. But let's move away from that and look at core inflation on the left-hand side. Core inflation peaked at around nearly 2%, right? About 3 years ago, 1.8% or so. Now it's hovering around at 0.5%. You have had more than 3 years of falling core inflation. How do you explain that? So far, no one has offered an explanation for that. But it does seem to me like a lot of pricing power doesn't exist domestically. Now, move on to the right-hand side diagram. The argument is that export is recovering well. And therefore, when export recover well, you will have more money, more GDP, and then people will spend the money, and that will expand GDP even more. In other words, export gets spent. And in the past, it's true. The Bank of Thailand recently mentioned that there's about a 90% correlation between export growth and consumption growth, between export growth and investment growth. In other words, your export revenue goes up, you invest it, and you spend it, you consume. Lately, this correlation broke down, and they said it's down to about 0.5%, about 50%. I would take the argument one step further. I would argue that this diagram shows you that you have something strange happening here. You can see in the diagram the nominal effective exchange rate and the real effective exchange rate. Now, what is a nominal effective exchange rate? It's basically the exchange rate of the baht vis-a-vis other currencies that we trade with, weighted by the trade that we do with them. Trade weighted exchange rate. In other words, it's unfair or incorrect to look at just baht versus dollar. You can look at the baht versus all the key currencies with which we, with countries which we compete with or that we export to. Right? That's the nominal effective exchange rate. And you can see that, yes, it says that the baht has been stronger. So we have been, in that sense, exporters have been losing competitiveness vis-a-vis the other countries in terms of the nominal effective exchange rate. But look at the real effective exchange rate, which is the same thing, but account for the difference between inflation here and inflation vis-a-vis our trading partners. You can see that divergence since about 2014. What does that mean? It means that Thai exporters are able to maintain their competitiveness because inflation in Thailand is lower, is being pushed lower compared to trading partners. Put it in a very, I think, relatively scary light. This is what it means. It means that exporters retain their competitiveness internationally by depressing the price that they demand from their suppliers, right? And you could argue that that cycle can manifest itself. In other words, suppose export were to grow faster, then you will have a bigger current account surplus. Then you will have a stronger baht. And when you have a stronger baht, then that will lower inflation. And so you have a cycle where when inflation is lower domestically, you would rather sell abroad because the price domestically is so bad. So you reallocate resources to export, and the cycle begins again. That's how you might get a situation where you have good export growth, but inadvertently, you actually depress the domestic economy more. Now, fact is, I could be wrong. And if I'm wrong, it's very simple. The export growth will lead to investment growth and consumption growth. In other words, people will spend the export revenue, if I'm wrong. But if I'm right, you will actually see this divergence between export improving, but domestic investment and domestic consumption not responding that well, and inflation keeps on falling or not rising, remaining at a current low level. I'd like to move ahead to look at policy and the longer term implications. But just before doing that, let me give you an anecdotal example. Several weeks ago, the government issued an executive decree that surprised everyone. Basically, it's an alien workers decree, right? That will impose huge punishment on people who hire illegal alien workers. And if you recall, the result was that there was quite a step up in foreign workers leaving Thailand over the weekend, tens of thousands of them leaving Thailand. And there was a big, hue and cry, and people were complaining, and the government therefore resulting in the government saying, we will suspend the most difficult provisions of that executive order for some months so that we could renegotiate. Now, to me, that was in itself important. But what was more interesting was no one in Thailand was afraid that that would cause inflation to rise. Think about it. You had labor leaving a country that's supposed to not have enough labor, and there wasn't really a concern that it will push prices up. The psychology isn't there in terms of inflation expectations, it seems to me. The only institution that warned about possible inflation rise was the Bank of Thailand. Right? even the recent flooding in the Northeast, I think very little was said about how it could cause shortages and prices to go up. Deep down, I don't think we have that pricing psychology, inflation psychology in mind. That therefore brings me to an interesting topic. The Bank of Thailand claimed that the policy rate, 1.5%, is accommodative because inflationary expectation, as they have surveyed it, is consistently 2 to 2.5%. In other words, if inflationary expectation is 2.5%, then the policy rate of 1.5% means real policy rate of -1. But if we consistently overestimate inflation and we think it's 2.5 when it's actually 1/2, then you end up with persistently higher than expected real policy rate, which is what I think we might be experiencing right now, is my thesis. Right. And again, the point is that if that is the case, suddenly you could have a psychology where, hey, if I leave my money as cash and not do anything about it, I'm not punished. I'm not affected adversely by doing that, by leaving money unspent. Why? Year to date, the baht appreciated nearly 8% against the dollar. Leaving it alone, I get a return, US dollar denominated of 8%. That's pretty good. Even in terms of nominal effective exchange rate terms, it was up about 2.5%, 3%. There's no need to hurry and spend the money. If I'm an exporter and I just, get my order through and got my money back, do I want to put my money and invest it in expanding production? If I think the baht will keep on appreciating and my profit margin will be squeezed, I can wait. Don't have to rush in. That's my concern, that there might be this thinking, hey, there's no need to rush things. I can just leave the money lying around. If you get into that psychology, the recovery will be relatively muted, I thought. Final point, the NPLs are largely impacted on SME. SME are the ones having the biggest NPL problem. And I can see why, because SME tend to look for and go after top line growth, right? They wanted to get sales, and they're much less concerned about leverage. In fact, willing to, pay a high cost of financing. In a deflationary environment or a low inflation environment, where nominal GDP growth is low, you tend to squeeze profit margin of companies like that, leverage small companies that need the sales growth, because low inflation also means low nominal GDP growth. And it also means that they will underestimate the real value of the debt that they owe. If you have 5% inflation and you borrow 100 baht, that debt, the real value falls 5%, right, every year. But if it doesn't, if inflation is 0, then that debt, the real value, is unchanged. So that's why I think SME has a problem. Moving on to this page, can the government do anything about it? In other words, do we have a good Phillips curve? Phillips curve is where you sort of try and see whether there's an inflation-unemployment trade-off. Very conventional, intermediate economics textbook chapter that says, well, you can use macroeconomic policy to get a little bit more employment if you tolerate a little bit more inflation. Basically what it says. Now, look at that, and it's interesting that Thailand doesn't have that in Phillips curve trade-off anymore. the Phillips curve that's further out to your right-hand side was in the pre-crisis time. And you can see that through time, the Phillips curve shifted closer to the origin. What it means is that there's much less Phillips curve existing in Thailand. The trade-off doesn't exist. It means that policy, trying to use policy to gain a little bit more of employment is not possible anymore. Policy is less effective. Macroeconomic policy less effective. Now, you could argue, and I agree, that unemployment data in Thailand is not very good. So let's look at employment data then. And what surprised me, and I must admit that I was caught napping here, right? We always forecast that population in Thailand will peak in 2025 or so, and then start to fall. What is interesting here is that the labor force has fallen since 2012. Since 2012. Labor force is fallen. What is labor force? Labor force is people who earn wages and can spend money. And that's already fallen by about 1.2 million people the past 5 years. A little even more disconcerting, employment has fallen by 1.5 million. Despite labor force falling, the economy could not generate even enough jobs to make sure that all those who are in the labor force can be fully employed. And the big impact came on the agricultural sector. Right? You can see that the agricultural sector lost 4.2 million jobs. 4.2 million jobs. And I'm sure largely it's because agricultural prices have fallen a lot, and the cancellation of the rice pledging scheme. Remember, we were all saying, oh no, it was the first time car buyers program that was pulling down demand and everything will be all right after that program's down. It hasn't, because it wasn't the cause. It seems to me this is 4 million jobs that were missing, and we could not generate enough jobs to replace it. Might be a better explanation of why demand recovery has been so muted. Now, then the focus is on the non-agricultural sector, which did generate nearly 3 million jobs. And then we went back and looked and see, well, what jobs were created? And we found that if you look at the situation a little bit closer to the present, you know already that a lot of jobs were lost because of the agricultural sector. Let's just look at the past 2 years of the recovery, because we're saying we're in a recovery. And you can see that during these years, actually the high-paying job sector like manufacturing was actually shedding jobs. Yes, tourism helped a lot and generated a lot of jobs, but the other jobs that were created were relatively low-paying compared to the ones that we had hoped would be creating more jobs, like in the financial sector, which were not. What does all this translate into? Oops. It doesn't want to move into a more pessimistic picture. ช่วยเลื่อนไป1 สไลด์ได้ไหมครับ เลื่อนไป1 สไลด์ได้ไหมครับ สุดท้ายแล้วเหรอ Oh, this must be the wrong one then. I think we got the wrong one. The last one that I had, but I think was dropped because it was added on later on. Basically, what I did was to simply look at the average wage rate. And what we found was that the average wage rate actually had topped off and starting to look like it's going to dip. And then what I did was just simply use the employment data to multiply it to the average wage rate. And you can see that the wage bill in Thailand is starting to come down from about year 2015 onwards. Again, that tells me that domestic demand is going to look fairly muted going forward, because we know that the employment numbers, total labor force and total employment is likely to be on the decline as well. Now, there is an annual statistic from the National Statistical Office. They don't have the new full year data for 2016 won't come out until the 31st of October, and we'll try to verify that that's the case or not for 2016. What I've done is not strictly correct, right? Because wages are skewed. So when I use the average wage, the mode is lower. Mean, median, and mode are not the same because it's not a bell curve distribution. So let's wait for that data and see whether a wage bill in Thailand has already peaked. And to me, that's something that the government needs to think about if it wants to successfully put Thailand on a sustainable growth path. How do you get wage bill in Thailand to keep on rising, right? With that, if you don't mind, Dr. Somkiat, I think we actually have about 15 minutes for questions, and we are happy for you to contradict us or to agree with us. Please, questions.
Before any question, I would like to conclude that I lost again. Because I was cautiously optimistic, but you are incautiously pessimistic. So no way to fight with you, Dr. Supavud.
Any questions, please? Please.
Is the household debt level have something to play with all these low inflations and the export growth, right, and the GDP growth and all that is not filtered into the domestic consumption? Is the household debts have to play with this?
I would say this. I think that hopefully I'm wrong, and then the export revenue will filter through and generate a lot of economic activity. Now, in terms of the household debt itself, it's interesting that in Thailand we have data to show household debt to GDP. And the focus has always been to try to bring down the numerator, the debt, right? My argument is this: if you deflate the economy, you actually bring down the denominator. What I would like to see is to generate a little bit more inflation to increase nominal GDP so that the denominator goes up, and so the household debt goes down, to GDP goes down that way. In other words, I want to deflate the debt away with more inflation. That's what I thought was one approach that you'd like. If you have a bunch of people who have debt and you want to reduce the debt burden, you can do that by actually causing inflation to rise. And for the authorities to not be concerned at all about inflation being close to zero actually is quite burdensome for debtors. It's great for people like me who's 60 and retiring, because I would have all my savings, the real value of my savings, preserved. But it's not good for people who owe money. And if the problem is owing money, then one way to reduce that burden is actually to create a little bit more inflation and to reduce the real rate of interest that they pay on the loan In other words, nominal interest rate unchanged, but inflation goes up. That helps the debtors.
Can I join here?
Please.
I think that the low inflation by itself is not a problem. I would think that the weak demand is a problem. And the weak demand, I think, arise from two causes. The first one is we have very slow growth and we have high household debt. That's where demand is low. But if export keeps growing and growing, because we have negative export for consecutive 4 years, and this year is just the beginning that we have positive export growth. And if it continues, it may trickle down, I hope that. And then household, we have more purchasing power, have more demand, and then the inflation will rise up by itself.
But we haven't seen that yet.
Because it's, you have only 2 quarters of positive export growth. It's too fast to ask for full recovery. And certainly we have structural problem that we have high income inequality, in the sense that even though the whole economy may grow up, the distribution may not be evenly distributed, which means the household may not have as high purchasing power as in the past, especially when the agricultural prices in the world market is not very high. But economics is a dismal science, and economics is unbelievably dismal creature. You try to make a very complex story, but at the end of the day, you conclude that it's really dismal for the Thai economy. I think perhaps you can have a more simple explanation, which is it is just the recovery is too soon. You have to wait. Do you think it's a possibility?
I think, no, I really do. I think that, I might be too pessimistic in making quick conclusion that we're not going to get well dispersed trickle-down growth. But I'm just saying that there are evidence out there to make me a little bit skeptical about the ability of the trickle-down to happen. Meanwhile, these factors are building themselves up quietly. Both the short-term factor like rising NPL and appreciating baht depressing the inflation rate, and the structural issue of employment and labor force starting to fall. I would argue that if you just make sure that you're aware of these things and take steps to make sure they do not manifest themselves, be less cavalier, right? Be less complacent about them, is my thought.
Have you tried, rather than using unemployment rate, but use working hours instead? Because in your slide you have shown that the labor force has shifted to the service sector, right? And the service sector in Thailand is largely informal. Well, you are also in service sector, but certainly it's not you who are becoming unemployed. But the Thai, people, vendors on the street that are also counted as service. Service is such a big chunk. And the ratio of informality of workforce in Thailand is very high in the service sector.
Yes.
Which makes it more difficult to count unemployment rate. So why don't you try using working hours?
It's very difficult. I don't think we try to look, and we don't have any good data on that. And you could actually argue that this transition from agriculture to informal service sector is actually a positive thing, because you're moving to a more productive sector, because underemployment in agriculture is even more than in the informal service sector. So you might have actually a more efficient transfer, and you might actually have better labor productivity. I agree that certainly could be the case. Obviously, it's something that we will have to think about going forward. But anecdotally, I asked my analysts in the automobile sector, in the manufacturing sector, and they did say that overtime is being cut. So anecdotally, it seems to me that I could assume that working hours are constant. I think it would not be too much off the mark, is my thought. In other words, you could argue that employment is down, but working hours are up, so therefore total working hours in economy is not down. But I don't know. It will be very
We used to
difficult.
look at working hours number. It has decreased, especially the overtime has been
Yes.
the first one to be
Yes.
cut when
Yes.
the economy is not very good.
Yes. Now, again, you could be reassured that, well, don't worry, it will come. Just wait for a couple of months, it will come because export has recovered in the past couple of quarters. And in that respect, that is possible. My concern, again, just to refer to the IMF did a special topics report on Thailand, and this is what they claim. They claim that they calculated Thailand's long-term equilibrium current account surplus at about 3 to 7% of GDP. In other words, that's the most sustainable current account surplus. We are going to be nudging on 10% current account surplus to GDP. What does that mean? It means that something has to give, right? If you then go ahead and accelerate import because demand goes up, then you will get back to the current account surplus of 3 to 7% of GDP and you get to equilibrium. That's the good scenario where export produces more demand and more import. But the bad scenario is the baht appreciates and appreciates and appreciates until export has to start to come down and bring the current account surplus back down to 3 to 7%. That would be the slow growth, anemic growth scenario where export eventually face so much headwind from the strong currency that your recovery gets even more challenging going forward. That is actually where I'm coming from. Manage this export growth well. Make sure it filters back into the economy. The argument seems to be that don't have to manage, just let it go. It will do its thing. My pessimism is based on just that maybe you just have to think about it harder and be aware of the risk here after inflation has been zero for 3 years. Any questions, please? And if the stock market goes down, don't blame us, of course. If there are no questions, then I would... Oh, there is one. Okay, sorry. Go ahead, please.
Hi, I'm Kirit. I'm also from TDRI, but I'd like to ask Dr. Supavud a question regarding the exchange rate. You've mentioned a lot about the Thai baht being strong, but how does that actually also influence inflation? Because a stronger baht means our imports are cheaper, and that also depresses inflation in the country, even though demand might be the same. And my second question is, what do you think about the technological developments that may have also depressed prices? For example, computers 3 years ago are much more expensive than today. There are many products that are now cheaper, even though the demand for them have not really dropped. So that's my question for you on inflation. Thank you.
Thank you very much. I think my thought about the exchange rate is that it must have a very, very acute impact on inflation because I'm not thinking just of imports, right? Imports definitely will bring inflation down if the baht appreciate because import is coming close to 60% of GDP. But even export is also a product that you consume in Thailand. We export rice, we export sugar. So if the price of export in baht terms fall also, that will also depress inflation. And you add the two up, it's 120% of GDP. It must have an impact on inflation in Thailand. In terms of the technological improvements that in all the goods that we consume, sure, that in the long term might play an important role as well. My thought had been that in fact, the newer products are lighter and use less resources, and therefore in and of themselves also impose less pressure on inflation. So think about a 25-inch television 30 years ago. It was 80 kilograms. The weight 80 kilograms. Now, 42-inch television weighs maybe 20 kilograms. So there's that as well. I know that there is that trend of products becoming much less resource intensive and therefore less inflationary. And of course, Facebook doesn't require any resources, much resources. And its market cap is bigger than General Motors. So resources are being allocated into companies that use less resources, and we have less inflation going forward. The Bank of Thailand also addressed that by saying that so that Thai consumers are turning to more service-oriented sector than normal consumption in the past, again affecting inflation. So I agree that is also a longer-term trend. But that would be an argument, wouldn't it, for the Bank of Thailand thinking that the equilibrium long-term policy rate should be lower. I guess we've run out of questions. Thank you very much, everyone, and thank you, Dr. Somkiat, very much. Thank you. Big hand of applause.
Ladies and gentlemen, please give a big round of applause to our guests of honor. Thank you very much, Dr. Somkiat and Dr. Supavud, for a interesting dialogue about Thailand and also the development. So, ladies and gentlemen, now our conference has come to an end. During the 2 days of comprehensive panel discussion from our honorable guest speakers and panelists, I believe that all distinguished participants will benefit from Thailand Focus 2017 conference. On behalf of the Stock Exchange of Thailand, Phatra, Securities, and Bank of America Merrill Lynch, I would like to extend my sincere gratitude to all of you who participate in this event this year, and I hope we will have an opportunity to welcome all of you again next year in Thailand Focus. Thank you very much. สวัสดีค่ะ